Good evening, everybody, and welcome to another live stream by the Option School. This is your friend Pradeep Singla, and in this channel, we talk about option trading strategies, and option trading adjustments. So, big falls in Nifty. Let us analyze what is happening and where do we see that okay, Nifty will go from here. So, last 3 days, market is falling falling like a pack of cards. So on Friday we touched all-time high of 14,753 Friday or Thursday, and then in last 3 days what we have seen market going down, and today also another 100 plus points down in the market. So what exactly is happening? Are we now has the holy grail of the market changed? Is the market now in a different mood? The way it was going up, now is it going to go down like that? Right, let us analyze on different fronts what is happening. Obviously there is a big event also coming up, at least for Indian markets, which is 1st February budget, right? So that also will make things slightly difficult for all option traders, and that will also add into the volatility of the markets. Okay, thanks, Mr. Akshay, for confirming that my voice is audible. And congrats to you. You are discharged from COVID hospital. Please take care. After discharge, also you have to take care, because this definitely causes a lot of weakness, right? Thanks, Mr. Rajiv Agarwal, for confirming that my voice is audible. Thanks and welcome to all of you. Let us start. All of you who are new to the channel, please go ahead and click on that subscribe button. When you are doing that, please click on that bell icon also, so that you get a notification whenever we are live. On most of the working days, we are live at 9 p.m. And all of you who are already part of this family, you know what to do. We need to click on that like button. Right? Thanks for all of you who have done. So let us start, and hopefully most of you will join. And again, it's like a session that okay, tomorrow is a holiday, so definitely there must be many other plans. So maybe I'm not expecting a big audience today because of tomorrow's holiday. But let us analyze what is happening in the markets, and markets which are falling and falling with lot of speed. uh, Sometimes we are getting a news that okay, there is some Indo-China tension, or there are some other reasons. We really do not know. Two rumors are doing rounds in the circles. One is that Indo-China tension, and second is that okay, Mr. Donald Trump is using his own influence for FIs to shift them from buying to selling. And I do not know what is the fact, what is happening in world markets, and whether he is still that much powerful to impact overall markets, right? So let us see, let us analyze these things on different parameters. First thing is what happened today. Although initially we were all expecting that okay, it will be a gap up opening, which was a welcome opening after Monday's fall. uh, Sorry, after Friday's fall, and after Thursday closing fall. Also on expiry, we have seen market going down like anything. So it was a welcome change that okay, markets are going up again, and Reliance had decent results. So opening was pretty okay. It was a sort of a gap up opening, but then from there we saw a big fall in the market, and ultimately in the last hours also market kept on moving down only, right? So if you see, it made a low of 14,218, and almost at low levels. It closed at around 14,238 is what it's showing. 133 points, almost 1% down. And if you see, even European markets are almost 1% down. Dow Jones is also now almost 150 points down. So everything looks slightly bearish from last 3 days. I think Thursday expiry, very dangerous expiry. Market went down like anything. That time there was no Indo-China tension, and at least it was not in the news. And then Friday also markets went down, and today also markets went down. So 3 consecutive days. Now, what has happened on Thursday? We have seen an all-time high of 14,753, and today market is at 14,238. So I'll say 2.5 trading session, and our markets are down by more than 520, 530 points. That is really scary, and this is what all of us were talking about, that okay, whenever there will be a fall, it can be severe. Is it severe as of now, or like uh, more of this is possible? That we need to see. So if we see today's market, it made a high of 14,491, low of 14,218. It's a huge gap. Again, almost around 280, 280, 270 points. Any day markets making a difference of more than 150 points between high and low, they can be termed as, uh, you can say, pretty volatile, right? And then if you see from opening and closing also, this is also slightly dirty, 14,477 and closing at 428. So there was no respite for people who were slightly bullish in the trades, and that has happened after so many months, that okay, most of the bullish traders got stuck up into many trades. Even open and close, if you see, open and close also has a difference of almost around 250 points. So whether we are going to go down like this now only, or whether we will stop it here, what are the other factors which are impacting the market, we need to see, right? So what Mr. Ram is saying, now bears should be happy. Most of us were perplexed as to how market kept on moving up, right? So most of us was thinking that okay, the way markets were moving up, every day it was making a new high, every day it was making a new high. Now at least there is a respite, but now most of the analysts definitely they say that okay, if market really want to go up, it has to give a kind of a small dip also, which markets have given now. Now there are two things which we need to take care now. One is the upcoming expiry, which is on 28th January. And if you see, the last expiry happened somewhere close to 14,000. And from those levels, we are only now 238 points, right? So one is the pattern of market going up by 800 to 1,000 points from expiry to expiry. That seems to be broken now, although it's just a statement, because you still have 3 days, and out of that, one day is a holiday, right? So Wednesday and Thursday are still there, and these kind of markets which move with so much of speed, anything is still possible. But yes, it seems like that okay, chances of now market adding on another 800 or 1,000 points expiry to expiry for the month of January are slightly low, although nothing can be ruled out. In 2 days, if we can go down by 500 points, in next 2 3 days we can go up by 500 points also. So that needs to be seen. What is happening on other fronts, if we see? Okay, now there is an interesting change, and this has happened after so many days. This data we have taken from Money Control. Here, if you see, although 21st was okay, uh, 22nd and 25th, on both the days, FIs and DAs both are net sellers. Now that very clearly shows that okay, since both FIs and DAs were uh, two of the major components of the market, they have turned sellers. So obviously the market should go down, and people who have purchased some of those stocks at very high prices, thinking that okay, now uh, it's going to go unidirectionally only. So now they might be feeling a little bit of heat of what is happening now. So if this trend continues, mostly DA is what we have seen, that okay, there have been news that okay, a lot of redemption pressures are there, so they are very consistent in their selling. We have seen in last so many days, and even in last so many months also, they are pretty consistent in their selling. So they are almost always selling only saving grace was that okay, FIs were buying, and they were buying heavily. They were buying much more than what DAs were able to sell, right? And that was one of the reasons what we found, that okay, markets are always going up, going up, going up. Now that pattern from last three trading sessions uh, has been broken. Market is now going down only, and out of those three trading sessions, obviously, uh, two trading sessions, FIs have also turned sellers, although they are not very big sellers, 765 crores and 635 crores. But yes, if you add 765 to 387 of DIs, add 635 to 1290 of DIs, obviously markets have become slightly bearish on this one. Now, based on this, uh, I, there was a discussion going on that okay, maybe now Mr. Donald Trump not very happy with whatever has happened in US elections. So if he has some kind of a weightage with all these big market players, Maybe he's showing that, okay, now let me show you uh, what do I mean, and maybe he was behind whatever rally was happening in the markets. That's just a rumor, right? I do not give any weightage to these kind of news, but that is also a kind of a thought process going on in the markets. All of you are expert traders. You can always confirm if these kind of news are having any kind of a value, right? So, but yes, one fact is there. Suddenly, FIs have turned into sellers, at least from last two trading sessions, and we need to see if that continues for few more trading sessions. Then definitely the way market has gone up, it will go down with a much faster speed. Going down is bringing down the markets is always easier than bringing the market up. Why? Can anybody answer my question? Bringing the markets down is always easier than bringing the markets up. Why? Mr. Gunjan is saying rumors of STT tax hike and change in time period of shares in LTC in budget, LCG in budget. Okay, whether this is a whether the local news is catching up, Mr. Gunjan, or not, we need to see. I don't think that this fall is because of any expectations from budget, right? Uh, Finally scared of combo doing decent profit after today's fall. Gravity, selling. Why? Yes, when markets are brought down, obviously there is a lot of selling happening. When markets are going up, obviously there is a lot of buying happening, at least in cash. So when you need to bring the markets down, that time you don't need money. You can extract money from the market. To bring markets up, people who want to bring the market up, they need a lot of money. They need to pump in a lot of money. But when they want to bring the markets down, they can always withdraw money and markets will come tumbling down. So that is why it's always easier to bring the markets down, because you're withdrawing the money, you're not requiring more money. And it's always difficult to push the markets up, because whenever you want to push the markets up, obviously whenever you're trying to do that, there will be a lot of other people, there will be a lot of retail customers, even a lot of DIs who will take benefit of this, and they will keep on selling, and you need to buy beyond their selling to bring the markets up. So bringing it down is always much easier, right? Whether you're booking the profit or whatever. So this we need to see. If this trend continues for some more days, then definitely market has hit its high of 14753 or something. And we need to see how deep is this fall. And obviously these Democrats, whenever they were getting elected, it was a fear that, okay, the kind of policies they will bring in may not be very market friendly. That was the fear. Although so far it was not been coming into the market's direction, but now since they have really taken the charge, so we need to see whether that fear is becoming a actual fear or not, right? Again, we have to hold on for a few more days. Now we have two important events. First is expiry, second is budget, and these are two local events. This has nothing to do with the global events, but global events obviously will keep on impacting even these two events, right? So if you see what is happening on the VIX front, VIX, this is again taken from investing. Now VIX is now climbing from last few days. Although what we have seen is here, it has taken a big dip for 2 3 days. When markets were rising, VIX was going down, and we are saying, okay, this is a real good trend, VIX is going down. So but now from last 3 days almost, when market is taking a dip, VIX is again climbing up, and if you see, it has gone to already 23.24, and roughly around 25 point something is the was the VIX before US elections. This was the peak, right? I think November 3rd or November 4th, although nothing happened to the markets during that event. But now VIX definitely is expected that, okay, before the budget, I don't know whether it will happen on expiry or maybe after expiry also, we have a trading day before the budget. So I don't expect the VIX to go beyond this, although we have seen now even going beyond this also means that, okay, another 10 to 12% rise in the VIX is, no, whenever VIX will rise. So it's easier to rise the VIX with the falling markets. It's easier for the VIX to go up with the falling markets, and it requires a lot of money to raise the VIX for rising markets, right? So if if there is a big hand in the markets, if there is a big market operator and he wants to raise the VIX, definitely for him it will be much more easier by bringing the markets down, raise the VIX, right? So VIX definitely expected it will go up, but I don't expect that okay before the budget VIX will go up to levels of 30 or 35. Chances are low. Generally, we have seen uh, this is the kind of rise in the VIX which generally before budget it is very close to this level of 24 and 25, right? So VIX is also rising, markets are crashing like anything, and expiry is coming up, a big event is also coming up, and within all this what has happened is we have got a local holiday of 26th of January, Republic Day. Now uh, there cannot be a bigger mess than this, that okay within all these situations we are getting a holiday which is a local holiday, which is not a global holiday. So tomorrow so many things can happen globally, and ultimately we have to uh, bear the brunt of that on Wednesday morning, right? So these things definitely make it much more tougher than usual, because if market is continuously running, there is no holiday, and if there is a holiday which is a global holiday, then things are slightly easier. But when these kind of things happen, uh, when the environment is such that okay markets are volatile, VIX is growing up, events are there, that time this kind of a holiday really pinches. But yes, this is an announced holiday, no doubt about that. So let us see what happens on Wednesday. Let's try to analyze today's fall of 133 points. Who are the major contributors in today's fall? We need to see that. And if I find that okay, oh, everybody is contributing to the fall, then it is slightly dicey. But if we find that okay, only by falling few shares this fall has been achieved, then we can have some kind of a consolation that okay, this is not a very broad kind of a bearish move. This may get covered up and market may start rising, and after that we will try to analyze the option chain also. Just give me a 5 seconds break, and that 5 seconds break gives you an opportunity to click on the like buttons. And if you're seeing it on mobile, you can close the chat window, click on the like button, and then come back to the chat. Just give me 5 seconds. Okay, thanks for a few more likes, although we would love to have much more likes and much more audience for whatever analysis we are trying to do. Okay, let's see. This is the sort of a heat map I've taken from NSE website. So, what it shows, it basically shows that whatever is the fall, what was the fall in today's market? 133 points. Out of that 133 points, what are the contributions given by different stocks? So, if you see HDFC Bank has contributed for 19 points plus in the market. This is not HDFC's move, but this is showing that okay, this kind of a move. Now, here, if you see out of 133 points, because Reliance has declared its result, and generally it has been observed, now this has become a pattern, hopefully it will break in some quarter, that whenever Reliance declares the results, irrespective of whether the result is a good or a bad result, it will crack down. So today it has gone down, I think, more than by 100 points. So it has not gone down by 86 points. Don't see this. This is the contribution of Reliance in the fall of the index. So these are the 50 stocks which have gone down. Reliance has brought down the index by 86 points. Imagine out of 133 points, 86 points are contributed by one share only. For me, this is a good news. That means this fall is not a very broad fall, although declines versus advances and all those things are okay. But this fall is managed by just by Reliance, although there can be a lot of churning. But here it's not a very broad fall. Not all the other stocks have done anything bad to the market. Only the Reliance thing is 86. You remove this. Suppose the Reliance was at 00 level, then out of 133 point, 86 points are covered. So markets were down by only 133 minus 86, around 47 points, which was very normal, which is very normal, right? So with 40 50 points move here and there is always acceptable. So this one share contributing too much to the fall, that means it is not a very broad based fall. That means everything is not lost in this market. It's not that okay, from here on market will keep on falling based on what is happening today. I'm right. Although definitely there are parameters which are showing that okay, FIs, I will not say FIs have converted into sellers now. I will say at least from last 2 days they are net sellers. Many times we have seen they have done it once or twice, and then again they have changed the gears, and again they have become buyers. So we need to wait and watch what they are doing for next 2 3 days. And the fall of the market today is, if it is majorly contributed by only one share, then we can say that okay, it's not that okay all the market has turned very bad. It's basically because of one participant, and there was a reason for that participant, that okay, there was a result declared which was not up to the expectation or whatever, right? So that way the fall is not very broad. Okay, in other stocks also it must, mid caps or small caps, whatever has happened. But if you're talking about index, in index there is a major contribution is by one stock, and obviously it is not going to happen every day. So whether they will pick up another stock and give it a fall, that's a different story. But as of now things don't look very bad, because major fall is controlled by fall in one stock only, which is having a very good weightage in the index, right? So based on this background, if we see, it's very difficult to judge that okay, where will be the market on first of February, when budget is going to be announced. But at least we can see that okay, for this expiry, what do we expect from the option chain? Although tomorrow is a holiday, and all these things, whatever I'm saying, are based on data. Data is uh, contributed by the traders, right? This data is not that okay, it is automatically coming. It's automatically coming up by whatever action has been taken by traders, right? So if I see the option chain, which is of 28th of January, market is around 14,250, you can say, at the money. So if 14,250 is at the money level, and the way we calculate the straddle premium here is almost 100 rupees, and here it is 86.6, so roughly around 200 rupees. So we can definitely say market still has a stream of rising back to 14,450, or in a bad scenario it can definitely go up to 14,050. That is the expectation of at the money straddle. Generally these premiums are not fixed just like that. Obviously these premiums have some logic, some thought process by the traders, that okay, this is the range market is seeing. And if I see the highest open interest, very surprisingly highest open interest still on call side is sitting at 15,000. But since there is hardly any money at 15,000, we can ignore this now, and we can say that okay, second highest open interest can be treated as highest open interest. So where is the second highest open interest? If you see this one, so 14,500 is the second highest open interest, which is 66,000. So that definitely gels with whatever is the premium available in the call. And if you see on the put side, the highest open interest is at 14,000. It's still maintained at 14,000. It was 14,000 even many days back. 14,000, 15,000 is still maintained. It is still not broken. So that very well means that okay, market can definitely jump back to 14,500, middle of whatever is the level. But as of now, if I calculate with 14,500 and 14,000, 14,250, 14,260 is a good level. And surprisingly, the straddle premium is very much falling between highest open interest. If the straddle premium is very much falling between two highest open interests, then chances are it will be honored. Most of the time, chances are it will be honored. So, in spite of big fall in the market today, if you see, in spite of a good fall in the markets today, what put option sellers are doing? Put option sellers are not running away from the trade. Okay, 14,350 and 14,400, there is some negative change, which means these people have scared of their positions. But if otherwise we see 14,300, no, traders have not scared of their positions. So there is definitely expectation market will come back. 14,250, 14,200, nowhere here we are saying that okay, put sellers are uh, running away from the market. So definitely this shows there is an expectation that okay, this may not lead to a very big fall on expiry day, right? By this expiry. And on call side, if you're seeing continuous addition on call side, that also shows a little bit of confidence that okay, this market may not rise very fast also, right? And with a huge open interest, change in open interest at 14,500 today, although the premium available is pretty low, 17 rupees only, right? So this story of option chain as of now is saying that okay, we are going to be in between this 14,100, 14,400, 500 levels. But again, this is today is not Wednesday, right? Today is just Monday, and then we have a Tuesday holiday. Then we have Wednesday trading, and Wednesday trading, what traders are doing based on whatever is happening in the global markets tomorrow and day after tomorrow, this data will change, and then this data will give us a clear picture. But definitely, based on only two things, only one thing I'll say: the straddle premium, which is pretty high, 200 rupees when only 2 days in the market are left, is pretty high. So this 200 rupees, whatever is the straddle, generally what we find that just on Wednesday it will not be more than 100 rupees or 110, 112 rupees, right? So this will melt to 50% on Wednesday. Now that depends that okay, what will be the straddle on Wednesday, whether it will be 250 or 350 or 200, whatever, right? So lot of premiums are still there in the market. Surprisingly, even the 14,000 put, which is the highest open interest, is standing at 25 rupees. Good healthy premium. And see the employed volatility on call side. I'm really surprised to see that employed volatility on call side is very high. Uh, and volatility on put side is not that high, right? uh, what does this mean? Basically, does that mean that okay, lot of option traders have entered into buying of calls? Is it? I'm not confirmed about that. But if you see employed volatility, see it here: 38, 35, 34, 30, right? And then suddenly going down. I don't know whether there is some discrepancy in the data, and whereas the employed volatility on put side is hardly anything, hardly any abnormalities are seen. So when employed volatility, why the employed volatility becomes low? Basically, more sellers are there, right? Why the employed volatility becomes higher? Basically, more buyers are there. So does that mean a lot of people have purchased lot of call options, and there is still a hope that okay, markets will really come up and all these call option buyers will make money? Whether FIs are involved in buying these call options, yes, they have done a lot of buying in options. They have done a lot of buying in index option and index futures. So all these things definitely signify that okay, there is a bit of abnormal buying side on the call side, buying on the call side, and not much of selling, not much of buying on the put side. That again throws an impression that okay, this market may not fall, and we still can have a very healthy expiry, right? Let's see, let's hope that okay, things are pretty much okay. I am not at all you can say disheartened that okay, this is a big fall and now market is moving towards 13,000 or 13,500 or whatever. So but the data is not speaking about that. Data says that okay, uh, expectations of traders is still not that bad, that okay, market is going to go down, right? Let's see whether there will be any budget rally, as what is saying Mr. AB, excited to see budget. Nirmala Sitaram says this budget will be like never seen in 100 years. So don't go by all those claims. You never know. Even a small thing they may be claiming has never happened in 100 years. So even if the timing is changed by 5 minutes, that has not happened in 100 years, right? So I am not very gung ho about the budget, because earlier also we have seen 5 6 budgets from this government. Although initial promises are very high, but when it comes to budget, yes, that is the one factor which I think. I am not very bearish about 28th January expiry, but I am definitely bearish for the markets after 1st of February, based on past experiences, with no bias towards anything, nothing like that. But what we have seen that okay, government is not very, or I'd say finance ministry has not shown very large heart whenever delivering things to anybody, and those things generally are not appreciated by markets. And past history also says whenever we have budgets by these kind of governments. So those budgets are not taken in a very you can say positive way by the market. So we have seen markets tanking down in many budgets. Although always we find that okay, there are some good, decent, exciting announcements, but those announcements do not convert into actual real uh, benefit to anybody. And if I think Mr. Gunjan was saying, he's a very well informed person, that okay, they're going to hike the STT, that definitely will be taken very very negatively. And let me tell you, in case that happens, that okay, they have increased the STT, and LTCG they have not given any benefit, and market has not tanked down. I can give it in writing that okay, if those things happens, then market, if it is not tanking down in on budget day, it will definitely tank down in next few trading sessions only, right? Anything of such nature where if you are increasing STT and you are unfavorable about LTCG also in time period, even if you are favorable, LTCG is now digested, and any tinkering in that on the other side would not be very very well taken by any of the traders, right? So that we need to see if these things happen, and on that day definitely government will support the markets. Government will uh, ask most of the SBIs or LICs, etc., etc., to hold on to the markets. If any tough decision like this is there, may not be on that day, but then maybe in the coming sessions, market will really, really tank down, right? So what Mr. Ram is saying, government has limited fiscal space, got to raise resources, tax in some way. That's okay, but then we have to show fiscal prudence not only by these things. There are so many other things which were expected from the government, which has not happened. So just by raising taxes, you cannot reduce. So does that make sense that okay, you keep on raising taxes and then you keep on reducing your fiscal deficit, sometimes having a higher deficit? Obviously it was a tough period, and we are now recovering from a lot of bad things due to corona. So there can be a lot of better revenue expectations in the coming months. So why to burden the citizens with all these things, right? Already when STT was implemented, it was said that okay, because we are removing LTCG, that is why STT is there. But later on, this government not only kept that STT, they have introduced LTCG also. So it's already uh, sort of a double taxation. So I'm not at all in favor of raising STT or decreasing the time of LTCG. Not these measures will not be taken very kindly by the markets. Hope I think when you're saying that okay, this budget is something which is not seen in last 100 years. So maybe one of the expectations which I was reading somewhere is that okay, remove all the straight direct taxation, remove all the income tax, and maybe you are introducing something like transaction tax and everything. So that would be a very healthy move, and that can be a game changer for everybody, right? So if something big like this is coming and getting announced in the budget, then it will be a budget which is once in 100 years. But if you say that okay, we will just tinker around your salaries and do a new calculation wherein you will save 100 to 200 rupees by doing all that calculation, that is not at all taken very well by the uh, taxpayers or by the markets also. So it should be a real change rather than a showcase change, which is people are expecting. And yes, for government also it's not easy. For finance minister, it's not easy when your resources are not so great. When most of the things are not falling in place. Your uh, inflation is also high. You have already reduced the banking rates. So a lot of difficulties. It's not an easy job for a finance minister or for a prime minister or for a government. But then still, as a citizens, we always keep on expecting. We have to look forward to these people only for bringing big changes in the economy, right? So nothing bad in expectations. But again, whatever I can see, I don't see anything very drastic or very different. One of the changes regarding corporate taxes had already been done. Ultimately, it was found that okay, that change was also not affecting many of the corporates. Then it was announced that okay, we will have a very big stimulus, and then if you see the details of the stimulus, it was also not that great. Hardly anybody could get something meaningful in that stimulus also, right? So now it's claimed that okay, it will be a 100-year budget. Only after seeing the budget and maybe understanding it for 3 4 days, all of us will be able to understand that okay, whether something really great has been done or some decorative changes are done. So let's see before budget. The first battle we are having is the 28th Jan expiry, and hopefully tomorrow global markets remain very normal, so that we do not have any big surprises on Wednesday morning. That is what we hope, right? So what Mr. Gunjan is saying, LIC will support market. Yes, obviously, if they know that okay, the kind of announcements they are going to make are going to tank the market, so they will instruct LIC to okay, take care of markets for few thousand crores, and then we will see. And LIC is the biggest guinea pig we have seen so many times, right? Okay, so what are the next workshops? Adjustments and firefighting is coming on 30th of January. It's 2 hours 30 minutes. Then 2 days workshop, probably last or second last workshop in this financial year, which is 6th and 7th Feb. And then calendar and double calendar spread workshop on 13th of Feb. Anybody willing to join these workshops, you can contact us. I will be showing you the numbers. Before that, what can be the expiry levels for 28th January? Last time we asked that, okay, what do you think market will touch 15K by 28th January? Now, in 2 days, I think things might have changed. The thought process might have changed. So let's see. Mr. Vivek Chandra is saying it's a bull market correction. Hopefully. So what is the expiry level you expect on 28th January? Please write it in the comment section. Do not write it in the chat, and let us see who is the closest person. What can be the expiry levels? And if you can give little bit of reasoning. Last time I think few of you have given excellent reasoning, and that really is a good read for all of us. So please give what is your thought process, what is the reasoning behind that, and what can be the expiry levels. You can say a lower level and upper level. You can select two levels, that okay, I think either the expiry will be at 14,100 or maybe it can be at 14,600. And if you can give a reason for that in the comment section, that will be really appreciated. So anybody willing to join the upcoming workshops, you can contact us at these numbers. You can send a WhatsApp, you can talk to us, and you can write to us at info@theoptionschool.in for any further information. What about likes? Okay, thanks for all of you who have already clicked on the like, and some of you are still waiting or still holding on to your likes. Request you to please go ahead and like it. If we get good likes, then maybe we'll plan a live stream tomorrow also. Otherwise, it will be a holiday. But if nobody is liking it, then obviously we are also discouraged that okay, let us not do a live stream even on a holiday. Share this video to somebody whom you think it will be useful, and write your comment, suggestions, ideas, feedbacks, anything you feel like, write it in the comment section. And definitely I'm expecting some good reasoning and levels, that okay, these are the levels wherein market is going to expire, and these are my thought processes. From all those thought processes, we definitely get a lot of good ideas, right? And if you're trading in options, still not subscribed to the channel, go ahead and subscribe to the channel. We do a lot of interesting discussions on option trading and a lot of trading strategies and adjustments, right? You will definitely enjoy it. So thanks to all of you for joining. Tomorrow is a holiday in Indian markets. Happy Republic Day to all of you, and just relax and let's see what happens to the markets in upcoming days. And my request to all of you, keep your trades as simple as possible. Keep your trades position size as low as possible. These big events like budgets are can be very notorious also. They do not finish on the same day. They can have a tail effect, maybe for further 5 6 trading sessions. So you should be very cautious. In a hurry to make a lot of money, it may not happen that okay, we have some big dent, and then to recover that dent it takes a lot of time. So it's better to stay very light on your positions. And if it is possible, please go ahead and reduce your positions on 27th and 28th and 29th. You still have 3 trading sessions before we actually enter into budget. If you do not have any positions, or if you have very light positions, it always makes sense that okay, now I can enjoy the discussions on the budgets rather than getting uh, uh, terrorized by my positions, the way markets are moving. So it always makes sense to have very low position, and whatever position is there, that should be as hedged as possible. right? So keep these words in mind. My request to all of you, and go low with a very very low position size in the budget. And if you are zero position size, that is also a very good strategy. As and when the budget unfolds, maybe within next 2 3 4 days, market is not running away, opportunities are not running away, but you should be safe as far as possible, right? So go ahead and have a good safe trading on budget day, and relax, enjoy your Republic Day tomorrow, and see you all maybe tomorrow or maybe on Wednesday. Thanks to all of you. Good night.